Welcome to Macro Matters, our bi-weekly conversation about the macro events that matter for our members in the finance industry. Today is January 31st, 2022. My name is Lotta Moberg. I am part of the Dynamic Allocation Strategies team at William Blair, and I have again with me Rich Excell and Tony Zhang. They are both of the Geese College of Business at University of Illinois. Welcome, guys.
Hey, Lotta, how are you doing?
Hi, Lotta. How are you doing?
I'm very well. Thank you for asking. I thought we would cover today the topic of energy markets, as well as some interesting geopolitical events that we've seen in the last few weeks, last few months as well. And particularly in the old Soviet sphere here, we have Kazakhstan, which has been interesting development, and as well as Russia now, the Ukraine-Russia conflict. So let's start with hitting on Kazakhstan. And Rich, will you give us an overview here of what did we see transpire there, and where are we in that situation?
Sure, Lotta, thanks. And so, yeah, Kazakhstan is one of those places that generally most people, certainly most Americans, think, well, why does it matter? I've never even heard of it. Where is it? I don't think I could find it on a map. However, it's a piece of the puzzle that's playing out, and it's very interesting because I think it's interconnected, and we'll get into some of those things. So earlier in January, in the western side of Kazakhstan, is a big petroleum producing region in Kazakhstan. Kazakhstan produces about 2%, just under 2% of the supply of petroleum in the globe. It's a top 5 producer in Europe. And as a big producer, the government has always had a cap on liquefied petroleum gas. And so this has kept fuel prices low for the people of Kazakhstan. Well, they lifted that cap and they allowed the prices to float to a market price, which led to tremendous social instability, lots of protests, et cetera. That was a case where the former dictator in Kazakhstan, a man by the name of Nazarbayev, used that as an opportunity to potentially unseat the current dictator of Tokayev, and it led to a lot of instability throughout the country then, and not just in that one region. This is a country that has been quite on good terms with Russia, and so Russian forces were invited in to help stabilize the situation. Normally, no one would really care about that, other than the fact, like I talked about before, is that Kazakhstan is a major producer of energy for the European continent, and the European continent has already seen enormous price hikes in the past year, and Russia has been is a major supplier there as well. So Russia coming into Kazakhstan and essentially getting more control over the flow of energy into Europe is something that has tremendous implications for the entire continent. I mean, if we look at the price of natural gas in Europe in the past year has gone up over 500%. I know I got my gas bill this year, it's up over 100%, but thankfully it's not up 500%. I mean, oil in Europe is up over 70%, and the cost of carbon is up 160% in Europe. So this is a major issue. It's a big issue in the US, but it's a bigger issue, I think, in Europe. And that really, I think when we think of Russia coming into Kazakhstan, that's not an isolated event, if you will, in Europe. And I wanted to kind of get your thoughts, if you will, because Russia is not only involved now in Kazakhstan, but they're amassing troops on the border in Ukraine. There's movements of Russian activity in the Baltics as well. So, Russia's becoming a pretty major player regionally, certainly in the European realm. And I'm just wondering if you have any color you can give us on what you know about Russia and the different aspects of what's going on in Europe.
I assume you're asking me.
Yeah.
Let's hit on that one so we get the full package of events here. Russia is a big player in Europe, and this has been an opportunity for Russia to remind the world of that. It's not something new, and it might be something that easily, just as it's hard for Americans to find Kazakhstan on the map, right? Easy to forget that Russia is a big player. It's really important, and I think that part of what we're seeing is Russia at some point wants to draw a red line in the sand when it comes to what it sees as an infringement of its backyard, its territory, when it comes to Western expansions. in not only Ukraine, but throughout East Europe, right? So after the fall of the Soviet Union, there was kind of a deal, right, that NATO would not be expanding towards Russia. NATO did expand regardless, and Russia has been complaining about that. And now we're seeing kind of Russia saying, no further. We don't want to see that. And they're flexing their muscles, right? You mentioned the troops on the Ukrainian border. It is Russia moving their own troops, right, on their own, within their own land. So it's not as what you might say is aggressive a move as moving troops to other countries close to your adversary, like the United States is doing. They do have these military exercises too, quite a lot. So it's a little bit hard to say how much out of the ordinary this is. But I think it is a game. What we're seeing here is very much of a game of two sides that both want to show that they are boss in some way, but it's also two sides that are playing a kind of cooperative game. And what I mean by that is I think that both the US and Russia has quite a lot to gain from this conflict being happening right now and being maintained. It is funny that the US is the one right now shouting out that, oh, Russia is going to attack. Ukraine is coming out, like the Ukrainian leader, right, is coming out and saying, no, like they're not going to attack us. Don't scare everybody with their rhetoric. Of course, Russia is also denying that they're going to attack. The US has the interest in having this conflict, I think, to a large extent, because Biden's approval rating has been falling quite a lot. And there's nothing like a conflict with an adversary to deflect the attention from something like that. I think that's quite a lot of what's going on from the US side. From the Russian side, there's also similarly an interest in this conflict. You may recall Alexei Navalny, and why I even have to ask whether you recall, the reason is, of course, that Russia has been very successful with this conflict to deflect any attention from that issue. So Alexei Navalny is an opposition politician. He was blatantly thrown into jail for being an opposition figure, and he is now jailed, labeled a terrorist by the Russian government, and nobody's talking about it. We talked about it quite a lot for a while, but now we have something else to focus on. So I think everybody's happy about that, because the Western side was really uncomfortable with how to deal with that situation. They don't really care about saving Navalny. They care about doing what seems right. So this is all me doing political economy analysis here. I'm not saying that people are evil. People respond to incentives, okay? So I think that's very much what we're seeing now. This conflict might probably go on for a long time, but it's not really the game of chicken that people want to think that it is and refer it to. It's a game of coordination where they both want to play the same kind of game, and they're both feeling out, both meaning Russia and the kind of the Western side here, both feeling out how much tension can we maintain here without somebody misinterpreting our moves as too aggressive and therefore doing something out of the ordinary, out of what will be a controllable situation here.
What's interesting, though, is while they're playing this game of coordination, as you mentioned, it's really kind of exposed some fracturing within the NATO countries themselves, it seems, because there doesn't seem to be a common view from that Western competitor, if you will. I mean, even within Germany, which has a new government, the chancellor and the foreign minister have had wildly different views on what should be done. The US is talking about maybe sending troops, but then you have the UK saying we're not going to send troops, but we'll arm the Ukrainians so they can do whatever they want. So in some ways, whether it was intended or not, it seems that Russia has exposed a lot of fracturing within NATO, which, as you said, had expanded post the fall of the Soviet Union, in spite of the kind of unwritten agreement that they had to not do so. And so one wonders if, even though there's this cooperative game, if because of this fracturing, someone like Putin might see this as an opportunity nonetheless.
I agree, yeah. And you see the German side, right? You have the Greens that are always the most belligerent, and as opposed to the rest of the government there. So yeah, absolutely. And this goes to one thing that you mentioned here, which is the energy situation in Europe, where Germany is highly reliant on Russian gas. And that is the sticking point here, right? They don't want to exclude Russia from financial cooperation such as the SWIFT agreement, or SWIFT network, which would make it harder for them to pay, and some people would even say impossible to pay for natural gas. And they don't want to, in other ways, like target the energy sector through, say, Nord Stream 2 abolishment and something like that.
Well, Lotta, I actually found out this conversation is very interesting, and as what Rich also brings this up, I especially like the term that you just used, that they are both sides are playing the game. Apparently, now the market, especially the U.S. market, hasn't really discounted the possibility of both parties having a war over there. Do you think that could really turn attention into a war? What might be your guess, Lotta?
I think it's very unlikely. It's some kind of mistake. No side wants a war. Russia doesn't want Ukraine, right? Russia is in it to protect, in their view, their fellow Slavs and the people Russian speakers who were displaced by the fall of the Soviet Union, right? So, I mean, remember, like, you have a government that basically told people to, hey, because we need to integrate our empire here, you should be moving to this place. You should be moving there. Don't worry, we're all the same now. We're all one brotherhood, right? And then all of a sudden, it all comes crashing down. You get tens of millions of people being displaced. Like, I can understand why you refer to that as the biggest geopolitical catastrophe, in history. Let's see if I can. I'm answering your question here.
Yes, especially apparently we haven't really gone into a big war before, not like Russia invaded into the Crimea like a few years back, right?
Mm-hmm. Yeah, thank you.
Yeah, what could be the consequence if the market really has no preparation, or the investor here has no preparation for a war, if it does happen?
Right. Yeah. So first, I would say it is very unlikely to happen, because on the situation that we have, Russia just doesn't have the interest of taking on a lot of Ukrainians that don't even speak Russian, that don't even like Russia. Crimea, they can enter without any bloodshed. Okay, they just gave it up. Right. It wasn't a war, really. It was them coming in and saying, hey, this is Russia now. There were some demonstrators that prior to that died. I think it was the Ukrainian government that shot on demonstrators at some point. And then the question, what if is the market prepared for war? No. Should it be? I don't think so. We've seen the wobbles in the markets reflecting some discontent with the situation, I think, and that's mostly, of course, reflecting out of war expectations, but of sanctions expectations in Russia when we look at the Russian markets and so on. But I don't think that I don't think a war is imminent, and certainly I would say imminent, because if Putin actually was plotting a war and I'm actually going to take over Ukraine, the last time that he would want to do that is when everybody and his mother is expecting it. We're all talking about this. This is clearly something that is more about attention than actually war preparation. I cannot think that he would be that stupid to actually do it now. So generally, should we ever expect Ukraine to be suddenly invaded by Russia? I guess it's possible, but again, I don't see the impetus. I don't see the reason for it. So therefore, I would say that, if there were a military conflict imminent now, it is certainly because some kind of mistake between these two parts where somebody's just pushing too hard. So it's possible, but it does go against any incentives on either side. There could always be a mistake made.
One thing I might counter to that is that we kind of have this paradigm or this bias of thinking that the next war will look like the last wars, that the next war would be Russian tanks rolling across the frozen tundra of the Ukraine to attack. However, what if the next war is something that happens in cyber or something that happens in space? Interestingly, NATO amended Article 5. Article 5 is the one that says that if one of us is attacked, we've all been attacked. And they amended Article 5 to include space as a place they could be attacked. And I think if you look at some of the other stories that have gone on, we know that there have been some satellites shot down in space. We know that, in fact, just recently, there was a cable cut that severed Norway from its Arctic satellite stations, and 2.5 miles of cable were cut and removed, presumably by a submarine. No one's saying who. And so one wonders if the next war that might happen might already be happening. It might be happening in places that the media and the people are not seeing. And so therefore, I think to your point, Tony, we could have a war, but maybe it won't look like the last ones that we've seen before, much like World War II didn't really look like World War I, and World War I didn't look like the ones before that.
Yes, if that's the case, that I think every investors over this market should actually start to think about that, because we have been in a complacent mode for too long, right? Especially over the past two to 3 years, when market actually reached to almost all-time high at the end of last year. Even though we see a minor correction, but the valuation point is still very high. Any incidents or surprise could cause a huge damage to the market.
But, you know, even that there isn't a war, one thing that the market probably will focus on is energy prices, as we spoke about before, right? And we saw that in Kazakhstan, a country with lots of oil reserves, there were protests when the prices were hiked. And we've already talked before about the prices and how much they've gone up in Europe. Remember back in 2018 when we had protests throughout France because of taxes that were put on in terms of fuel prices. There have been estimates by some investment banks that Europeans or households are going to spend more than 54% more this year for energy than they did last year. And this is a year where there's going to be elections throughout Europe and elections, midterm elections in the US as well. One wonders if these higher energy prices might be sustained and might lead to a little bit more social unrest throughout the continent and maybe even here in the US. And I think that's something that the market would care about.
Yeah, what's your thought on that, Lotta? Do you think the conflict right now over there would be contributing factors for the gas or energy price to be very high sustainably? What's your thought on that?
I think it is now, but I do think that there is going to be an increased realization that this is not going to lead to abolishment of Nord Stream 2 or a war that would shut Russia out. So there are wobbles and adjustments going on. I'm on the side of not believing this is time to jump all into oil just because, you know, you're going to ride this big upswing when the war comes or something like that. I don't really buy that, but I do think I think that the power structure has been revealed really well in Europe, having to do with like, hey, Russia does have a weapon here. You can't just say we're not going to buy Russian gas anymore. What U.S. has been doing now is trying to diversify and help Russia out by both sending their own LNG as well as finding partners such as Qatar and others to send, you know, gas to Germany. But it's not, they can't cover it 100% of the German need in that way. And Germany abolishing their nuclear ability there just piles on this problem. So, but you know, that's the reason why Germany can't just say, oh, let's see what happens if we don't get gas from Russia and let's go all into this U.S. belligerence. They just have to be smarter than that. So I do think that the incentives there too are not on the side of this escalating that much in the sense of the energy war. And that would be my guess here, my outlook just on this front. I don't really see the oil price implications there. I don't know if you know, Rich, about, you know, where are we on the Kazakhstan front? Is that been resolved now, or is that a source of energy wobbliness here?
It is potentially a source. I mean, the fuel price caps that were removed have been put back in place, but the Russian troops are still there. I think one thing I would say on oil is, and as with any commodity, is that historically we say the cure for high prices is high prices. And the expectation is that supply is going to come online. at these higher prices with, higher marginal revenues and drive those prices back down. And that will happen over a period of time. But there are a lot of frictions this time that there haven't necessarily been there before. And you mentioned some of those. I mean, one of those is the fact that the global supply demand imbalance is more than 2% out of whack, and it has been persistently so. And while this negotiation is going on over Ukraine or throughout Europe, one would think that Russia has no incentive to bring incremental supply on and take that price of oil down lower. Instead, they'd probably rather keep the price of oil a little bit higher as a bargaining chip. We've already seen OPEC tell the Biden administration that they're not going to increase supply when there's asked to. It wasn't just Germany shutting down its nukes, but it's the U.S. turning off some of its pipelines, all for ESG related reasons. But this is again removing some potential sources of supply that could ease the price of energy. And they're just not there though right now. And so this energy transition that we're going through could lead to persistently high prices, and it might make those adjustments that we normally would see in a relatively shorter period of time be a little bit more persistent this time. And that in an election year, that is something that I think ultimately is going to be something worth watching.
Yeah, Tony, what's your view generally on more holistic view maybe on the energy markets?
Yes. Definitely, this is a very critical topic at this moment because we realize that any fiscal policies or monetary policy adopted by the central bank in the U.S., also by the U.S. government as well, I think hinge on the inflation. And the energy price apparently is one of the biggest contributing factors to the inflation. No doubt about that, right? That's why any a big movement over the energy price or any factor, including geopolitical factor, that could actually contribute to the sustainability of the high energy price, that the market or the investor will be concerned that Federal Reserve might actually have to be more aggressive in terms of their monetary policy. For instance, hiking the interest rates sooner than later, or be more aggressive to hike the interest rate, right? They, for instance, last week we heard about from the central bank chairman Powell that he came back during his press conference and comment that he doesn't rule out the possibility to hike the interest rate on every FOMC meeting. So this has become very hawkish and called really drive the nerves for almost every investor into the market. So from that point of view, that I think we are very concerned, as from my point of view, that I'll be watching this, the development over the geopolitical event and same as the energy price very, very closely. And definitely the thought from Lotta and Rich, I think are very valuable in terms of how we perceive and this could be sustainable or not, will be interesting to watch as well.
And that scenario that you're painting, right? That assumes that we do get not only persistently high energy prices, but also increasing from now for them to contribute to inflation going forward.
Yes. Remember in the past, one of the research that I did was to actually analyze whether any financial distracts over the market could actually change the way or the path for the central bank here to update their fiscal rate or monetary rate policy here. Now, because market at the beginning of this year actually have gone down, have a minor correction for almost 7% by year to date. Now, would this be a major concern for the central bank? In terms of putting everything together, including the inflation, also job creation together. So this is how I would think that everyone are watching closely as well. So anything change over there, the tension, even though, as what you say, the U.S. investor might not even know where the Kazakhstan is from the global map, but the ripple effect, or maybe something that I will ask Lotta Rich later. The ripple effect if have any implication for the energy price, could be potentially very significant, because the market is very fragile at this moment. Anything that could ease down the geopolitical tension, similarly leading to the lower inflation implication, that will be extremely helpful to the US investor as well. I think from the research academia point of view, like from the inflation, financial distress will still be a major concern for central bank. This is also worthy of looking.
No, I definitely agree. Like, the conditional conclusion is that if you get escalating conflicts, either in Kazakhstan, but certainly in the Russia-Ukraine game theater kind of situation, that, yeah, definitely, like, if you cut Russia's supply of gas out of that Western sphere, definitely that's going to impact on the upside the energy prices that we're seeing in the US and in Europe. I think, China is going to step in and alleviate Russia from the distress and all that. Still, absolutely, it's going to be an impact. So it's all, we can all draw different conclusions, right, from what I believe is going to happen, what the incentives are, the politicians that are involved here, right? So my belief is that it's not going to be an escalation. Therefore, we're not going to get, some great jumps in energy prices. But if that's what if you have a different belief on your political front, I would say, yeah, you should definitely land on the other camp of that. So we should probably soon wrap it up. Rich, do you want to give us any more color on kind of how we should think about this whole situation right now when it comes to the energy prices and what to look out for on the geopolitical front here?
Well, I hear your point on the energy prices and the need to accelerate for them to continue to accelerate in order to have it flow through to inflation. But what I would suggest is, and I'm not calling for any sort of wage price spiral, but companies are imploring their employees at some point here in the next few months to come back to work. And increasingly as they do so, they want them to drive back to work. And gasoline prices were up 70% year over year. And so as those employees are going back to work, you can imagine that they're going to be asking their bosses for a raise. And that's going to be another potential source of inflation. And so I think there is an element of a domino effect that is going through here. And so I'm probably not quite as sanguine about the outlook for energy and its impact on inflation in 2022. I think by the end of 2022, we might, because of base effects, not be as worried about it, but that doesn't mean there won't be some pain to be felt in the near term. So I'm still keeping my eye out. I'm not necessarily suggesting that there's going to be any sort of war near term, but I just think that there's a lot of market volatility that as we kind of go through these adjustments, that I don't know if it's fully discounted in the price of riskier assets. Tony, what do you think about that?
Yeah, Rich, I completely agree with you. I really think right now the market hasn't really thought about that the inflation could last longer than what we have expected. And this could potentially lead to more actually hawkish reaction from the central bank here. If it does happen, that the market will be, I think, will be very risk off in that moment. And if we do see the market risk off, then this year, every investor might potentially see a tough decision. But hopefully that will not be the case. From any point of view. One good side is last Friday, we do see, I think, a relief here that the consumer confidence index was actually lower than expected. That actually points to the view that maybe it might not be as difficult as from an employer point of view to have to pay much higher wage than that used to be over the past few quarters. Now, I think if we see the ease over that it could be a relief to lots of investors and market as well.
Thank you so much for that. Okay, thank you so much for joining me today. I hope that our listeners and watchers have gotten a sense of what to look out for and at least our different takes. And we don't agree about everything. So a little bit of different views of how to think about both geopolitical situation and how that affects markets. So thank you very much for joining me today.
Thank you so much. Thank you, Lotta. Thank you, Rich.
Thanks, Lotta. Thanks, Tony.
And
okay, very good.